Welcome to Investors Insights, episode number 122. Today we will be discussing, is China that important? Will interest rates impact your portfolio? And what does the rest of the year anticipate in terms of volatility? If you like what we say, email us. If you dislike what we say, email us. And if you really, really like what we say and you think it's of value to make a difference for somebody else, forward it to them. So let's get started.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy team at Five Plan Partners. 3, 2.
All right, guys. Last week, eventful.
Very.
Yes.
Really? Very well.
Yes. So I lost some hair and gray came in more. And, I also felt like a fighter pilot strapped in my chair there at times. So as the screen was bouncing around red and green. So, but it definitely was eventful. So, Bobby, you made some great points in our early morning meeting. Just talk a little bit about last week.
Yeah, so last week was obviously wild, very extremely volatile. But having said that, the week was actually ended up very well. Both the Dow and S&P were up about 1%.
Yes.
And so it was a roller coaster, but ended here. So that was good. Also, oil was up over 12% last week. So that's a positive as Saudi Arabia invaded Yemen. So, but on the economic front, GDP came out and was revised upwards to 3.7%. Now, this is important going into this week where we have jobs reports. And so obviously with the Fed, raising rates possibly on September 17th, this week is very important with jobs report and also wage growth that comes out on Friday. That kind of dictates, tells us about inflation. So it's a very important week.
But okay, so everybody gets to see our nice sides. We got pretty heated today. There was debate. I still believe that deflation is a big issue. Do you guys agree or disagree on that?
Agree.
Agree? Okay. So therefore, I don't think rates are going to go up. I know that we've had some debate. Rates could go up on September 17th. I think we're not going to see an interest rate increase in September. A lot of wishy-washiness, or I should say language from the Fed that just won't make a commitment either way.
Right.
So you agree with me on that?
Yeah, I agree. I think the wishy-washy has kind of made it so the market, if the Fed, even if they do raise rates, what kind of impact is it going to have?
Yeah, it's getting to the point they've talked about it so much, who cares?
Right, and if we're fighting deflation, you've got high demand for longer-term fixed income. They raise the short end. Does that impact the longer end? Probably not. So.
Right. But having bonds in the portfolio last week paid off nicely because we saw, as the stock market was coming down, then we saw people rushing towards bonds. Right. So from that standpoint, that was beneficial. Oil prices, we've gotten some calls from people saying, I need to jump into energy. All our indicators are still showing that we're in a bear market in commodities and natural resources, and there's more to come. Everybody's still, I think we resolved that in our debate, but everybody's still in agreement on that. So we still think oil prices could go as low as $20 a share. No guarantees, I might add, but we still think that's a possibility, which then would put gasoline prices at $1.70, somewhere around there?
Even lower than that, possibly.
Would it? Okay. All right. And we saw it break $2 here just right down the street from us and other parts of the country. So we think we're still in good shape there. In terms of this week, everybody needs to be aware of the fact Labor Day weekend. So by Friday, there may not be buyers out there.
Right. Yeah. So you don't want to be net long for a long weekend.
Yeah. So if you're a trader,
right.
Now, if you're a long-term investor, different story there. So so we still think we'll have volatility in this market. So Ashley, you brought up some points about China too. You want to talk about those?
Happy to, Greg. And as Greg often says, many times what we like to track are things on the back page that later become the front page. And we've had so much going on about China and the devaluation of the yuan. What was interesting to us is that when you think about it and the Chinese government trying to go in and sort of buy into their stock market, that's very much like a 2015 version of our TARP back in 2008, 2009. But let us give you a couple of interesting facts about that. When our government did it, they did it at a time when the market was very low. So what happened by the time they exited, whether it was insurance or automotive or wherever it went, they made nice profits back to the U.S. Treasury. The Chinese situation, they're going to have a little bit harder time paying theirs back because a lot of that purchase they've done in their markets has been really at kind of a high market.
Yeah.
So what's interesting about that, there was a Goldman Sachs study that said about the 1st of August, the Chinese government has about 900 trillion yuan in stock they've bought. Their pension fund, banks, everything else, that's about 141 billion. So it's been a large bailout for them. But as opposed to ours, where we were riding a favorable market and we can pretty much unwind, that's got the potential to be problematic down the road because we feel that could be much structurally harder for them to do just because of where the markets have been.
Yeah, well, where the pressure comes in on China, and interject here because we debated this, is really if China continues to devalue their currency, if their market continues to devalue, then that's going to, of course, and let's say, for example, you throw out a number, devaluation of like 30%, that's going to decrease the price on their exports by 30%.
Yeah.
So where China really impacts everybody is not so much their stock market. They don't impact us that way. They impact us if their products continue to decline in value, which in a deflationary period puts even more pressure on.
Harder to compete.
It is. Yeah. So you've heard a lot of ideas here on the vlog. You've heard in terms of our issues in terms of portfolio strategies. We appreciate you watching today and hang in there with us. We got some more exciting times to come. Talk to you soon. Thanks.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.